Hello and welcome to the Paypers exclusive video series. We are joined today by Amit Hooja, CEO of Paysecure, for a discussion about payment orchestration. First of all, Amit, thank you for taking the time to speak with us. It's great to have you.
Diana, lovely to speak to you, and thank you for this opportunity. I'm thrilled to talk to you today.
Thank you. So before we dive into the topic, let's set the stage. Payment orchestration is increasingly important for merchants today. With the growth of e-commerce and the global rise of digital payments, customers expect optimized checkouts as well as access to a wide range of payment options, leaving merchants to juggle multiple payment gateways, currencies, and fraud prevention tools. Payment orchestration simplifies these complexities by ensuring frictionless transactions, higher success rates, and adaptability to regional preferences. In the face of growing competition, having an efficient payment strategy is essential for scaling efficiently.
Right.
Amit, can you start by telling us more about Paysecure's story and how you help merchants drive business success?
Yeah, sure. Look, I've been part of technology and technology business whole my life. And very early on in my life, I got involved into digital businesses. And typical digital business is quite complex. Um, it's um, it's spread across various geographies and it's got its own complexities in terms of how the, the workflow happens and how the transactions are done. And payment specifically is a complex topic about it because you're talking about customers across geography using the payment methods that they are used to, and um, and being able to adapt to that and being able to handle that complexity. It's a challenging task, and not every business is ready for it. Some businesses which are at enterprise scale may have their own orchestration technology, but most nowadays outsource it or give it to specialized companies like us, which champion it. We are very focused on it. We have teams which have muscle memory, and we are able to handle that complexity and smoothen out all the problems for the customers in the best possible way. So coming from that background, where a typical digital use case and applying to multiple digital use cases where similar problems exist, where businesses are geo agnostic and we're getting traffic from everywhere, and usually the internet traffic is very expensive, of course, based on what the industry is and where it is purchased and how it is purchased. But then merchants care about getting the best out of it, getting the best conversion rates, getting the best optimized value out of it, and payments become important channel for that. And we handle all of that, all of that complexity. So coming from that background, I started Paysecure, building the technology layer, building the bridge in between, and figuring out how to best integrate the payment methods, how to processes in place to optimize the payment methods, and then from there on evolving it and figuring out how to get the best value for our merchants. We it's very exciting to be part of this payments journey. We're typically license agnostic. We typically would work with local payment methods and providers who do what they do best, and we do everything in between, from taking the payment instruction from the merchant to really delivering it, the signal, to the last mile, and everything in between, reporting, managing, tracking. That's what we were part of. So yeah, that's 1.5 years ago we started Paysecure with a very small team, and we've seen immense growth, both in terms of number of clients that we handle, amount of transactions that we handle, and the team sizes, and we've grown to 70 plus people now, in a short span of time, and I'm really proud of that.
Yeah, it sounds like a very, very interesting story. And thank you for this very useful intro. Can you tell us why monitoring and optimizing acceptance rates is essential for merchants? Also, is there an optimal threshold that they should aim for?
So, so essentially, two questions there. Let me take care of the second one first, which is, are there any optimal levels? Well, look, boundaries should be pushed, and the averages and maxes are last Sunday's news, and we should and we must try to achieve best as much as possible. And the fact of the story is, the thresholds are highly dependent on various parameters and various conditions, and it depends from industry to industry, from segment of traffic to segment of traffic. Depends on seasonality, depends on quite a bit on day of the week, day of the month. When you have people just paid, salaries are just paid, you will see higher approval rates, and along the way in the month, you would see there are lower approval rates. So the bar and maximum thresholds keep changing, but on an average basis, we keep pushing the boundaries, and we try to optimize as best as possible. We're always evolving, we're always optimizing. Our teams are always looking into what can be done best, and sometimes it is in form of new payment discovery, and sometimes it's driven by customers, sometimes it's driven by merchants, sometimes we drive the adoption. And in terms of the first question, really, how do payment orchestration layers help in terms of optimization? Lot of it starts from what we do best and what is left to us to do best. So we have teams that are used to of payment environments, used to of working different complex payment ecosystems. Our developers are used to of integrating these complex systems in a full scale, full proper, exposing all the payment methods and functions that may be available, and that matters a lot, because at the how you integrate it really affects how the payment methods are going to function and how they are going to behave. And from there, it starts about what tools and software that we provide to our merchants to be able to track and optimize again, and be able to dig deep into the data and figure out what are the issues and problems that are affecting the approval rates, and how to optimize the payment methods. Now, and from there, it's about understanding the user behavior, understanding what payment methods they prefer, how they interact with various systems, and really be the champion of payment method priority and discovery for the customers, whether we know the customer in some way or shape or form. And then, of course, it's easier because now we know the customer preference, we have the remembrance about the customer. But then sometimes it's about we don't know the customer, and then we depend on cumulative intelligence about customer, on how this kind of customer behaves and what kind of customer payment methods they prefer. So from there to really understanding understanding how various systems are behaving and what thresholds they put in terms of risk fraud measures or limits, or what impacts the the approval rates, and having access to that tons of data and crunching that in real time through machine algorithms, and really be able to take decisions based on that. And the net result of all of that is you get better out of your um, return over investment on your spend on advertising dollars. So there's a lot of things goes in between, and we do everything from the perspective of integrating, optimizing, tracking, and then dealing with the events that could impact the approval rates. So there's a lot of technology involved in that. There is a lot of understanding of the payment methods involved in that, and yeah, that's what we do on a daily basis for our merchants.
Yeah, thank you. Thank you for the explanation. Building on that, what is the difference between soft and hard declines, and how can merchants address both types to enhance payment acceptance rates?
Yeah, right. So, talking about typical card payment method scenarios, there are errors that you can recover from, and those are either they require a human intervention, or it can be automatically sanitized and improved upon and recovered. So typical errors like insufficient funds, or do not honor, or if you would even look at something like CVV error, that's all soft decline in my view. And with some human intervention or prediction, or automatic intervention, you could recover from that. The you could either sanitize the data, predict what is going to be the behavior of certain kind of data, or you could even present post the event a different payment method or different option to the user to either correct the information or choose a new payment method to really go through the transaction. But then some cases are hard declines, and nothing can be done about that. And it's typically cases like stolen cards. It's closed accounts. It's invalid credit card. Not much can be done about that, and those are typically hard declines, and you cannot recover those transactions.
Yeah, I see. Thanks for making this delineation clearer. Now, speaking of enhancing approval rates, what solutions and strategies does Paysecure employ to help merchants increase them?
Right. So I would say let's look into what impacts the approval rates, and what is it that actually impacts, and how do we optimize that. So there is system behavior, there is user behavior, and there is payment method behavior. And breaking it down, typically system behavior would be how the payment method is integrated. Has it been integrated properly? um, are the flows in perfect or proper order? Are we asking the customer right information and passing it on to the payment method, and all of that? And then also, if the payment methods system is not overloaded, are there timeouts? And if there are timeouts, how you are recovering from it, how you are detecting it, tons of information around how system behaves, or because when you're processing the payment, you are dependent on merchant systems, merchant ecosystem, and then you are yourself in the middle, which is payment orchestration. And you're passing those signals to the end point of it. And from there, probably there are in between 2-3 steps which goes on. So from a PSP, it goes to a processor, and processor, it goes to the system switch, scheme switch, and a lot can go wrong in between. So that's system behavior, and how user behaves. That's a completely different topic about it, which is if the user has sufficient funds on the card, if the user is entering the correct data, if the issuing bank has certain fraud filters in place, if there is any erratic behavior, and sometimes it can also be merchant reputation, and it could be about if the merchant has introduced a new traffic source, and from there, if they are generating lots of fraudulent transactions, then it could impact the overall score of the merchant, and it could impact the overall approval rate. So there's a lot can go wrong in between payment methods, all I'm trying to say. And what we do best is having a good remembrance, generating intelligence about customer, understanding user behavior, understanding customer behavior, understanding the traffic behavior, and being able to present the right payment methods to begin with, and applying intelligence in that. From there, when the signaling happens, having algorithms in place to understand how various systems behave, and if we are really able to take decisions in near real-time basis on what should really happen, if we're getting certain kind of data from customer, and if it can be sanitized enough way that the payment method expects and needs, then we do automatic corrections. But then really from there, understanding how and what thresholds which various issuing banks or various payment methods have, and adhering to that, and having algorithms in place to understand bin to mid, or certain kind of customer to mid, and really directing the traffic that way. So typically we give lots of tools to merchants to take the decisions on their traffic. So you are able to take any transaction, apply metadata to it, and which is typically endless number of parameters. But to begin with, it's 50 plus parameters that we allow you to build decision trees on, and that essentially allows you to segment and sub-segment your traffic, and be able to apply different payment methods with different risk profiles to various segments of traffic, and from there, really be able to shift the risk between various payment methods or various banks. A typical digital merchant would work with either multiple geographies, and there are multiple local payment methods involved, or within even geography, one specific geography, they would work typically with multiple banks. And then what our system does is allows you to route and the traffic between different banks with different weightage scores, and distribute the traffic. So so you're not always dependent on one particular bank, and you're not arm twisted into their rules and how you should function and where you should function. And it just gives you that breadth of ability to optimize your payments. And then from there, really, Um, I think data and being able to look at data with various different perspectives. And for example, we have which is a report I personally use a lot. It's an analytical report by where you can group by various different metadata in the payment methods or transaction, and you can apply n number of filters, and then you group by and you see the approval rates and transactions and everything in a tabular format. And if you spot something, let's say you are looking, okay, I want to see by browser how traffic from various browsers is affecting the approval rates. And now you found, let's say Safari on iPhone is not behaving properly. Now you click on that, and then you can dig deep on that and see, okay, what specific countries the traffic is coming from. Now, from that particular specific countries, you can dig deep again and say, oh, in that particular segment, can I see if it is the issue is with Visa or MasterCard?
Yeah.
If it's Visa, then I can further dig deep and say, oh, is it by specific issuing bins? So it's an endless number of pinpointed access into the data, which allows you to really understand the problems better, understand and optimize your payment methods in the best possible way.
Thank you. Thank you for the explanation. You previously touched upon localization a bit in one of your prior answers. Let's get back to that. And I have a question regarding this. How do Paysecure's solutions enable merchants to adapt to regional consumer preferences?
So, look, I think to begin with, it's payment method discovery and having a coverage. Typical digital business is able to function across various geographies, and in some industries and businesses, you don't even need licenses or local licenses to function and and operate. So wherever you can generate clicks from, you're in business, but you need payment methods that local customers are used to of, and they understand how to pay. Um, but then these businesses do not want to go into each country and build this huge payment infrastructure and doing the integrations locally and speaking the local language, and that's where we come in. So having the access to this huge network is one big challenge solved. And from there, really, there's tons of understanding of user behavior that goes in, from how and what is the payment methods they have used in the past, or they or we if we don't know the customer, then how can we segment them better? How can we understand their behavior? It's either based on where they are located or what kind of segment they belong to, and it's amazing how people behave in flocks and groups, and you could put easily people in groups and see the similar behavior coming through various places. Like, for example, um, there would be people from certain areas, and men above 35 would really are comfortable, but below 50 are comfortable with credit cards. But then there'll be segments of customers who would be 60 plus, and they are not happy with credit cards, and they would use debit cards. um, and you could put easily consumers in that behavior and evolve the payment methods from that perspective. And it really helps to localize and prioritize the payment methods, because friction is a big keyword. And if you can build a frictionless payment methods, then the end mile of decision making process is much shorter, and it converts into getting the better dollar value out of your clicks.
Yeah.
True believer in localization and understanding the consumer behavior.
Yeah. All right. So looking ahead now, what trends and advancements can we expect to see in payment orchestration, and how do Paysecure's plans come into play?
Right. So again, two different questions here. Um, what trends in payment orchestration? Um, Look, tons of what we do is catching up to ecosystem, and it's a very complex ecosystem because a lot of innovation happens on daily basis, and it's happening more so and more as the fintechs are rising. There are smart, intelligent people who are carving out, small piece out of payments or banking business from the traditional banks, and they are carving out niche areas of innovation.
Mm-hmm.
Tons of what we do is in terms of catching up all to all of that. There's new payment methods being discovered. There's new trends coming up. There's new technology coming up. So we have to keep up to date. In terms of having access to all of that, and then technologies like network tokens, and being ready for it, being able to
Yeah.
adapt. But really, the big trend is APM adoption. In my view, there is tons of traffic shifting from schemes to APMs, um, and a lot of localized payment methods do really good job into capturing the local imagination or local payment methods on how customers consume payments. So continuously we see in our own data even that traffic is shifting to APMs, um, and continuously people are more comfortable using other alternate payment methods. But then that's catching up, and that's coverage. But for us, really, big one is algorithms and understanding of the behavior, and putting. Remember, we're being hit by millions of transactions, and
Yeah.
millions of transactions have customers, and customers have behaviors, and behaviors have metadata, and there's tons of data. So to be able to crunch all that data and build patterns on that in a near real-time basis, and be able to take decisions on the fly with them is a big one for us. And I think it's easy to have the coverage, and it's fine. It's basic integrations. Everybody can do it. But then the big one is really applying the machine language algorithms to optimize the payments, optimize the risk, optimize the merchant behavior and the customer behavior, and really be able to take the risk from high risk to the edge of the medium risk.
Mhm.
Um, that's something orchestration layer is going to continue to have a big say into it. And yeah, we're internally very well aware about it, and we're making investments in technology to adhere to that.
All right. Amit, thank you very much for this insightful discussion. Today, we learned more about the benefits of payment orchestration, strategies for increasing acceptance rates, and also what the future holds. Thank you once again for joining us, and we look forward to speaking to you soon.
Diana, thank you very much for your time. I really appreciate this, and lovely speaking to you.
Thank you. Have a great rest of the day.
You too. Bye bye.